Stacy's going to be here.
And Madam Mayor, we are ready.
Great, thank you. And I think we are at
It's gonna be there.
6:30, so I'm going to go ahead and call this work session to order to do the, 5:30, excuse me. Presentation of the audit documents by our city auditors. We do have a quorum. I know there's at least one other council member that will be walking in. They're on their way here, but we will turn it over to you, sir.
Perfect. Thank you very much. So I know most of you in the room, but for those of you that don't know me, my name is Grant Todd. I'm an audit principal with Altman Rogers and Company, a CPA firm based in Anchorage. This is our second year doing your audit, so I appreciate you having us back for another go. In front of you, we have two documents: the large comprehensive annual financial report, and then the smaller document, the letter to the governing board. I'm going to start with we used to refer to it as the CAFR. We're changing the name. I apologize, we didn't change it. It's going to be called the Annual Comprehensive Financial Report moving forward. It's for the fiscal year ending December 31st, 2020. So unfortunately, we're into August. So a lot I'm sure has changed since then. But once again, our audit period is for the year ended 12/30/20, and this covers the financial statements for that time period. So a little bit about our audit approach. Our audit approach is 100% risk-based. Risk is determined based on our history of the city. Since this is year 2, we had a year of audit experience to go on. Interviews with management. We looked at changes during, from 19 to 20. There was some turnover in the finance department. We looked at prior year findings. Other situations that are going on, obviously COVID had huge changes on the city's activities. So we had to look at our audit approach, how the city responded to the changes due to COVID, people working remotely or people being out. So we wanted to make sure that there was, that the internal controls had been changed to reflect that, or we took that into our approach. And then also we just, we know certain areas are high risk. If you're dealing with a lot of cash transactions, we focus on those areas as well. So again, our audit of the financial statements is risk-based. I should note that we perform essentially 3 audits: a financial statement audit, a federal single audit, and a state single audit. So we give you 3 separate opinions based on those audits. We do them all concurrently. We do a federal single audit because there are over $750,000 of federal expenditures, and we do a state single audit because there are over $750,000 of state expenditures, or state awards or federal awards. Our basic audit approach is we test your internal controls of your major transaction classes to see if we can, in essence, or in our opinion, rely on the internal controls you have in place. So the major transaction classes we tested are cash disbursements, essentially the AP transactions, payroll, cash receipts, the city as a whole, all the cash receipt systems, credit cards, utility billings, and hardware billings. So we took the entire population for each of those transaction classes, selected samples of 40 transactions from those, tested the internal controls that the city has in place. There's nothing set in stone that your controls have to be X, Y, and Z. We look at the controls that you have in place, test them to see if they're working as designed. We also looked at all what we said is material transaction materiality. Is up to us. We set the materiality based on revenues in each opinion unit. For your financial statements, we give an opinion. Even though we give an opinion on the financial statements, we technically give a separate opinion for all your major funds. So you have a government-wide, which includes your governmental activities, essentially the general funds, special revenue funds, and capital project funds. We also give opinions over your major enterprise funds, and then all the other aggregate information, so your non-major governmental funds, non-major enterprise funds in total. So technically, for the city, we probably give you, in essence, 9 or 10 different opinions, but in your case, we give you an unmodified opinion or clean opinion without modifications over all those opinion units. So what I was saying is we have different materialities for all your opinion units, and so for each of those opinion units, there's different materialities, and so we've audited all the material transactions associated with those opinion units. And the reason we do that is when we give an opinion, or when we give our opinion, we say the financial statements are materially correct. So we audit all transactions over materiality to make sure that they're properly classified by fund and by object code, so supplies, equipment, utilities, things like that. So we report to that object level, so we want to make sure that they're properly classified. We also look at all material journal entries to make sure that there's one supporting documentation and that they're reasonable under the circumstances. Then during our compliance audit for federal compliance, it's risk-based. We have to look at what we consider high-risk programs. This year we looked at the CARES, the COVID-19, the CARES Act money you received. You know, you received almost $6 million of that. So that was our major federal compliance program. And then our state single audit is expenditure driven. We have to look at all programs over 150,000. So we tested, performed state compliance over 4 state compliance programs. I'll get into that in a little bit. So with the financial statements, there's the introduction tab. Behind that, there's a transmittal letter. So since you are presenting, an annual comprehensive financial report, you're required to submit a letter. Management's required to submit a letter of transmittal that kind of talks about the audit profile of the city. Pretty standard year to year, other than it changes a little bit kind of what's going on in the city, and then a few other documents. But so the tab I'm going to cover next is the financial statements. So behind that is the independent auditor's report. It's 3 pages of jargon. Really the only thing I'd like to point out in this is the second paragraph, management's responsibility. As most of you are probably aware, we work for the city council. We're hired by the city council. Our audit opinion is addressed to the city council. And so I always like to delineate this for the council. Management is responsible for the financial statements, or for the preparation and fair presentation of the financial statements. Below that, our responsibility as auditors is to opine on the financial statements. So management is responsible for the financial statements. Our job is to audit them and give an opinion on the financial statements. Middle of page 2, where it breaks out our opinion, as I said earlier, the city's received an unmodified opinion on these financial statements. So in our opinion, we believe the financial statements are materially correct. Once again, unmodified, which just means without any modifications to our opinion. Beyond that, starting on page 4, is the MD&A, Management Discussion and Analysis. Essentially what it does, and once again, this is another piece of the financial statements that are required to be prepared by management. They take the financial data presented in the financial statements, kind of puts it in Word format. I know this is a huge document, 160 some pages, so I would say if, you don't have a whole lot of time where a constituent comes to you and says, hey, what should I know? I would point them to this document, because once again, it kind of summarizes a bunch of big tables and a lot of different numbers kind of into Word format, and kind of gives a quick summary, easy to use information in the MD&A. And once again, it's put together by management from the financial statements. And I should say, at any point in time as you guys are flipping through this, let me know if you have questions. I know that this is the first time you're seeing this document. And so if there's any number you have a question on, or if there's anything in particular you have a question on, by all means, please interrupt me and I'll do my best to answer the question. So I'm going to jump ahead to page 16, which is the start of the actual financial statements, the statement of net position. And it's 2 pages. And the statement of net position is essentially the balance sheet of the city as a whole. And includes your governmental activities, which, as I said, is your general fund, special revenue funds and capital projects funds. And then the business type activities would be your enterprise funds and internal service fund. So once again, take this with a grain of salt, since this is a 12/31/20. Total assets for the city, $250 million. Most of that, $190 million, is capital assets. You have cash and investments of $45.8 million. Then below that, you have some deferred outflows, essentially related to pension and OPEB, which we've talked about before. The PERS plan, the city's enrolled in the state of Alaska PERS plan. So there's deferred outflows, which are essentially future outflows that will take place in the future, and then a loss on refunding of 1.7. So total assets and deferred outflows, $253 million. Next page, liabilities. Total liabilities of the city, $54 million. And then net position, nearly $200 million, with $35 million of that being unrestricted net position. And I should point out, the statement of net position Once again, includes all short-term and long-term assets and liabilities, deferred inflows and outflows of the city. So this includes cash, accounts receivable, but also includes long-term receivables, current liabilities such as AP, payroll liabilities, and then your long-term debt, bonds, loans, and the pension and OPEB liability.
So unrestricted includes our operating budget, is that correct?
It would be more on the fund level. So this is once again at the citywide, in most of your budgets.
Oh, so this includes enterprise funds?
Yeah, so this is everything, including internal service funds. So when we get to essentially the C and D exhibits, that's more at the fund level where you're budgeting those individual funds. I think it'd be harder for you guys to budget at this level because once again, this is the full accrual method where the fund financial statements for the governmental are the modified accrual, where you're budgeting debt payments are recorded in the funds. Where in these two schedules, A and B, debt payments are pulled out and reduce the debt on the balance sheet. Where when we get into the general fund and the debt service fund, you're going to see those debt payments as actual expenditures.
Okay.
And so this is, exhibits A and B are a little more confusing because they, once again, they're all encompassing and show the governmental funds and the enterprise funds in these two different columns.
But does not include Providence?
It does.
Okay, so then it makes it more confusing.
And it does, correct, yep. So in our opinion, and I apologize, I should have pointed that out. And I'm not trying to get you to jump around. So we say in our opinion, we did not audit the financial statements of Providence, which represents, 29% of the assets of the health care facility fund, and then 99% of it's essentially revenue. So Providence does, when we include those in the city's financial statements, I don't want to say it distorts it, because if you look at these financial statements year after year, you're able to see that information, but on a monthly reporting level, you're not getting that Providence information. It's just something we do strictly for financial reporting purposes since they're a component unit.
Okay.
So, yes, once again, they will distort exhibits A and B, and then when we talk about the proprietary funds or enterprise funds, they'll distort that fund a little bit from what you're usually used to seeing. Exhibit B1 on page 18 is the statement of activities. And once again, this just breaks it out. Governmental activities is the top third. Business type activities is kind of the middle section. And it breaks out expenses in the far left column. Program revenues, which is charges for services, operating grants and capital grants. And then essentially the sixth line up from the bottom is the change in net position. So governmental activities had a loss of $1.6 million. Business type activities had an increase of roughly $1.2 million during the year. Exhibit C1, the next page, page 19. So this is the balance sheet for your governmental funds. Probably, what you probably focus on more on a monthly basis would be from here back. So the general fund, and then the City CARES Act Special Revenue Fund. In years past, the general fund has been, I think, for at least probably the last 3 or 4 years, the general fund has been the only fund that is considered major for reporting purposes. It's just a calculation that we do when we prepare the financial statements. But this year, due to the large amount of revenue in the CARES Act fund, it was major, and actually the Little Point Road is also major, but there was no year-end balance sheet for it. So once again,
so we received more in the City CARES Act revenue fund than that $270,000.
I'm sorry, this is just the balance sheet. One page back, or Exhibit D1, is the profit loss. So this is just year-end balance sheet activity for the major funds. And once again, Lowell Point isn't shown here because it didn't have a balance sheet or any balance sheet items as of 12/31.
Okay, so there's still $279,000 in our CARES Act?
You had accounts payable, so you had incurred expenses as of 12/31 that had not yet been paid. So it technically was closed, fully expended. Expenses had been incurred. Well, this is all it's telling me. I guess I shouldn't tell you it's fully expended without looking at the work papers. I'm guessing it is. So I can look at the CFA and tell you if you fully expended it. It was fully expended, and the reason I know that, you don't have to look, on page 92, we report of an award of 5.3, and you spent 5.3, and that's, and then there's actually 2 awards you received from KPB, and you received another 1.5 and you spent it. So essentially, expenses incurred as of 12/31, not yet paid, so that's why we're reporting on it. We still have cash on hand of 279, and then that cash was paid out subsequent to year end, January, February. So it probably, moving forward, you shouldn't see it as a balance sheet item. And once again, that's why the whole point isn't, even though when we go to Exhibit D1, you'll see P&L activity or profit loss activity, but no balance sheet. So, thing to point out here, 13 million of assets, most of that being cash and investments. Total liability is 1.7, so a quick ratio of current assets over current liabilities. That the higher the number, the better from a financial standpoint. So that's 11 something. So pretty good. But the very bottom right corner, third up, unassigned fund balance across all your governmental funds is 7.1 million. In the general fund, it's 7.17 essentially, which represents 69% of your current year expenses, or the FY20 expenses, which is essentially 8.3 months of reserves, which is up from 7.3 in fiscal year 19. So, I think if I remember right, I don't want to say it's city charter, but I think
3 to 6 months.
you guys had wanted up to 6. Yeah, exactly. I was going to say 6 months.
Council set a policy to have between 3 and 6 months reserves. So we're at 8.3
Yep.
at 12/31/2020.
Yep, and it's grown by a month during this fiscal year. Exhibit C2 is just a quick reconciliation from the fund financial statements to the statement of net position, which was Exhibit A1, and that's just, again, this is mainly the long-term items that are added to this balance sheet to get to the statement of net position. So capital assets of 55 million.
So that includes our hospital, long-term care facility.
Yep.
Okay.
Yep, streets and roads, buildings, construction in progress, machinery and equipment, yep. And that's just for governmental activities. I should say that 55.4 is just governmental activities. There's, probably, tell you real quick, millions of dollars.
Sea Life Center building
Yep.
would not be included or included?
I think it's in governmental activities. I think it's in here. And then, so the capital assets at the top, the rest of the numbers are all less than $1 million, and then down at the bottom, there's general obligation bonds of 5.3 million, and then your share of the net pension and OPEB liabilities is $6.6 million. So Exhibit D1, page 21, this is the statement of revenues, expenses, and changes in fund balance for your governmental funds, essentially the profit loss for your governmental funds. So the major governmental funds, as I said, general fund, CARES Act, $5.3 million, and then the Lowell Point Road, which was essentially the bulk of that work was done in fiscal year 20. So total revenues for the governmental funds was 22.6. That's almost an increase of $8 million from the prior year. And once again, most of that comes from CARES Act of 5.3, and then that spending.
So yeah, so we had a 33% loss in sales tax, but you're saying we had $8 million increase in revenues.
Yep.
So that's directly attributed to CARES Act and then
Essentially
savings.
those two. Well, CARES Act and you had the Lowell Point Road in prior years. Essentially, you just got around to, well, it was from a natural disaster, so you got around to repairing the road.
Oh, so that's an in and out.
Essentially, yes. I mean, it looks like new funding, or from that standpoint of looking year after year. But that's, if anyone was to look, in the management discussion and analysis, it essentially, you take these $1 million numbers and round them to the thousands. So if you were to look, you have a constituent asking you, hey, revenues, tax revenues down, like I said, $2 to $3 million, but revenues up $8 million. Why? It's because of essentially new grant funding, essentially. Expenses of $25 million across all funds. General fund was 10.3. In the back, we have a budget actual schedule, but you budgeted $12.6 million for expenditures. You spent 10.3, so there was even though your revenues came in roughly $2 million under budget, your expenses came in 2.2 under budget. And your general fund actually had an increase in fund balance of 192,000, sorry. Your non-major funds, all the other funds are combined in the aggregate, presented in the aggregate. They had a decrease of $1.5 million. There is a combining schedule in the back that takes all of your non-major special revenue funds and capital project funds and lumps them together for that column. But the biggest portion of that loss, the capital acquisition capital project fund had a $911,000 loss. Flood mitigation capital project fund lost $400,000, and streets and sidewalks had a $145,000 loss. So those three made up the bulk of that $1.5 million loss. So any questions on that?
Where is that sheet that you referred to as the combined?
Oh, it is under additional supplementary tab. And it would be on, in that it would be on pages 84 and 85. Lists your non-major governmental funds. So the third line up, well, so those are 1, 2, 3. Fifth line up from the bottom shows losses. So the far right-hand column, the capital acquisition fund shows the loss of $911,000. And then the next page shows the rest of your capital project funds and their losses. So in total, your capital project funds lost $1.5 million. And we don't show a budget actual schedule for your capital project funds because they take on project length budgets. And so I don't, but once again, so I can't tell you if you budgeted that, but more than likely I'm guessing you did, since you were incurring such a large loss. There's no revenue in the capital acquisition fund. You expended $775,000, you transferred out $135,000. So, transfers are usually budgeted and approved by the council. So anyway, those are the, like I said, that's the bulk of the, the largest decrease in fund balance during the year. Any other questions on that? I don't want to jump around if you get, and I know, if you're looking at 84, on page 84, if you have any questions, I'm more than happy to try and answer. If not, I'm going to jump back to page 23, which is the balance sheet for the proprietary funds, essentially the enterprise funds. You have 4 major funds for reporting purposes for enterprise funds: electric, harbor, SNCC, healthcare facilities, which, as you referenced, includes the operations of Providence, and then your non-major enterprise funds are combined. So then you have the total, and you have the internal service fund. So on page 24 is the liability and net position section. Unrestricted net position across all your enterprise funds is $25.3 million, which is up $7.9 million from the prior year. A bulk of that, a large portion of that, comes from the healthcare facilities fund, and a lot of that is attributed to Providence. They had I don't want to say a banner year, but they made some money.
Where's that 25.3?
I'm sorry, it's so on page 24, fourth, so the fourth line from the bottom, under the total enterprise funds column. I'm sorry, this is kind of a wonky schedule, it's pretty small.
Okay.
So total net position of 136 million, 109 of that is associated with your net investment in capital assets, essentially capital assets minus any debt used to acquire them. You have restricted net position for the commercial passenger vessel tax, and then the difference being the 25.3.
So when you look at hospital revenue, that includes the 1 million, or the 1% sales tax is included in their revenue?
Yeah, I believe so, because you transfer that in, right? It's recorded in the general fund and transferred in, so I believe so, yes. Or, yes. And sorry, I don't know that, it took me a second to say that. Unfortunately, we take your activity from your enterprise fund and then combine it, and then we have some eliminations that we have to take out, kind of behind the scenes to come up with these numbers. So so Providence is audited separately by KPMG. They supply us with our financial statements, we combine them, and then once again we take out, eliminate similar activity between the two. So on page 25, Exhibit E2 is the profit and loss for all of your enterprise funds. And once again, so the third line up from the bottom, change in that position. You see the electric fund had a loss of $632,000. Harbor, a loss of $1.3 million. SMIC, a loss of $781,000. Healthcare facilities, an increase of $3.5. And then your other non-major enterprise funds made $138,000. So total increase $856. Once again, this is somewhat misleading because of Providence financial statements. And then Exhibit F3 is just the statement of cash flows, which is required for enterprise funds. Behind that is the notes to the financial statements. Essentially provides additional information to the numbers here, provides additional information on your capital assets, investments, debt. You know, there's 15 pages of pension and OPEB disclosures that are required. So if you want to fall asleep late at night, that's something great to read. The next tab is the required supplementary information tab. And this provides a very summarized version of the original and final budget for the general fund, and then actual expenditures at the function level. Under the additional supplementary information tab, which is under page 76, we provide a detailed schedule of the general fund, so the final budget versus actual. You know, and so on page 69, right here in the general fund, there's a budget actual for the CARES Act. So for all your major general fund and major special revenue funds are required to present, or management's required to present.
And the difference between original and final is if there was a budget update.
Amendment, yeah, we take the first one that's passed by council, and then the final one that's passed by council. I think you only update it once a year, but yeah, so this is taken right off of essentially the official records of the council.
But if we have resolutions that change budget line items, is that incorporated also or no? Because we do have budgets that, or we do have resolutions that would like add a position, which would change a
Yeah.
budget line item.
I would assume they're in there, yes.
Okay.
Because, yeah, we pulled the final budget, I would say from your or from the, most of the time, if it's available on your website, we take it, but usually it's a request from
And they probably don't
finance department.
update anything.
Yeah,
If we have a resolution that passed, like I guess I'll ask our new finance director, in the future, if we have a resolution that passes and changes something in a budget, like a department's budget, would that be updated so that it would be reflected in the audit?
So if it's something that's resolution and it requires a budget journal entry, yes. So if it's an appropriation that needs to take place, we would do a budget journal entry for that.
So, and appropriating funds means,
Yes.
yeah, okay. Because I just see very few changes, so I was just curious.
Well, and once again, this is a very rolled up level. Once we get to 3 pages back, 5 pages back, you'll see, should see more significant changes.
Okay.
Well, I guess I'm sorry, I shouldn't say that.
If they're there.
Because we only show the final budget as opposed to original and final in the supplementary section, so that's true. Because yeah, you're right, there's
Like, I'm sure we
no
added at least.
activity in
yeah.
expenditures, neither
Yeah.
of them, so.
Okay.
And then behind that is 4 pages of required disclosure for pension and OPEB. So the final, or the next tab, additional supplementary, as I said, this provides a final budget actual for the general fund in a much more detailed level, essentially by department. And, then object level, salary, benefits, supplies, G&A. Behind that is a combining balance sheet, combining P&L, which we kind of looked at for your governmental funds. And then behind that, so this is page 86, I'm sorry, is the non-major enterprise funds combining balance sheet, combining P&L. So your non-major enterprise funds are water, wastewater, and parking. Page 87 shows the activity for those. Your water fund lost $98,000. Wastewater had a net increase of $79,000, and parking an increase of $157,000. On page 92 is the schedule of expenditures of federal awards. And this is what I was looking at earlier, Mayor Terry, when you'd asked if you fully spent the COVID money, and so this shows the award amount and federal expenses. So $6.8 million was spent of the CARES Act money. As I said earlier, we tested that as part of our federal compliance. We took a population of transactions, a lot of, I shouldn't say a lot, well, I know it was a lot of money, went to local nonprofits and businesses, utility payments for eligible members of the community. Let's look at payroll transactions that were charged to the program just to make sure that they were allowable and reasonable under the guidance from the federal government. And we had no problems with that. And that was the only major compliance program that we audited. In total, you had expenditures of $11.7 million of federal money during the year. 2.2 of that is money you receive, you and the clinic, or the city and the clinic receive in conjunction. You're co-applicants for that money. And the clinic is audited separately as well. The other financial statements are presented here, but they're audited separately. 2 pages back, page 94, is the schedule of state financial statement. For schedule of state financial assistance, you spent $1.9 million of state money during the year, and we audited the form with asterisks next from PERS on behalf payments, fisheries business tax, commercial passenger vessel tax, and the storm surge money. So once again, we audited those 4. We had no findings or no issues to report. Yeah, and that is the statistical section. This is a requirement in order for you to get the certificate of excellence when you present to CAFR. And this is presented or prepared by management using information from the financial statements, and most of these schedules present 10 years worth of data. So once again, this is also a good thing if you want to look at some historical trends or you have constituents that have questions. This is a good section to point to as well, because it shows changes in revenue, net position over time. It gives kind of a good look back for people that are interested in that activity. Jump forward to page 126. This is the federal schedule of findings and question costs. And I skipped over a couple letters, but that's where we talk about, give our opinions. I don't want to bother burden you with listening to those, but it's where we give our opinion over federal compliance. But page 126, the federal schedule of findings and question costs, starting at the top, working down. They said earlier, an unmodified opinion on financial statements. We do note that there's some material weaknesses, which we'll cover in a second, over the financial statements. Federal awards, unmodified opinion, and no findings over those. So page 127 is where we talk about notes the financial statements findings. So during our audit, we came across some issues that we considered findings. The first being during our audit of governmental capital assets, we noticed that there was a number of current year additions that hadn't been properly added to the schedule. The city had hired a contractor, due to turnover in the finance department. You guys have contracted with an outside contractor to deal with your capital assets. So we kind of saved them to the end of the audit, thinking that would be done, because I'd even talked to them and provided them some information. And then when we got to doing the audit work, once again, we looked at all your material transactions. So in those, we're able to identify, capital asset additions, usually they're large dollar items. And so we noticed that those hadn't been added to the schedule. Essentially, the contractor just rolled it forward and not added those. So once again, there was a large number of additions we had to add to the capital asset schedule. So essentially they were materially misstated at the start of the audit. Second finding, lack of internal control over year-end procedures. This is essentially a carryover from the FY19 audit. There was at the start of the audit, there was a number of balance sheets and P&L accounts that required adjustment based on our audit procedures. When we get into the letter to the governing board, there's a summary of the adjustments that we posted, but under condition and context, it says capital assets, accrued interest, cash, debt, PERS on behalf, and compensated annual leave fund charges required adjustment during the audit. And then finding 3, lack of internal control over utility billings. I don't know, probably don't need to go into this in too much detail, as I think it's been talked about, or I assume I know it's been talked about a lot around the table, but lack of internal control over utility billing, based on discussions, I had with a number of council members and some things that, the RFP process for the forensic audit, and then, like I said, discussions with members of the council. We took our normal sample, and then we also expanded our sample based on conversations, found a number of errors during that testing, and that has led to the finding of the utility billings. Once again, I don't think that comes as a surprise. So with each of these findings, management is required to submit a corrective action plan to each of those, and that is on page 133. JESRA has submitted, and it's presented in the financial statements, a corrective action for each of the 3 findings. As part of our fiscal year 21 audit, we're required to look at the findings, perform audit procedures over the audit areas, and granted they're all pretty large audit areas that we'd audit anyway, and then we'll have a response. We give a response to those. As you can see on 132, I'm going back, sorry. 132 is a summary of prior year audit findings. So last year we had 2 findings. So we report on them, lack of internal control over year-end inventory balances. That finding was resolved, and lack of internal control over year-end procedures, as I said, was repeated in the current year. And JESRA and I had talked, last week as she was putting this together. In a number of these instances, or a couple of these instances, changes have been made to correct these going forward. The downside, I think, with utility billing is, we were performing, we performed our audit at the end of March. I know you guys are going through the forensic audit now, so it's more than likely, I would say it's probably highly likely that finding will continue or be repeated again next year, just because, I know just in talking to the utility department when we were doing the testing, they were aware of, a number of errors, and, they're trying to fix them at that time. I just know if we take a representative sample, I'm assuming we're going to come across some of the same errors at the beginning of this fiscal year. So before I move on to the letter to the governing board, I'll open up to any questions. And I know that was just a pretty quick, for being a 130-page document, I would say that was relatively quick. And you can continue to look at it as well while I do cover the letter to the governing board. And then if there's any questions that might pop up, I'm happy to come back to this document.
I have one quick question. I know Vice Mayor Baclan was curious as to if we were auditing employee travel vouchers. Does that get audited?
So something like that, just being honest with you, I'm assuming they're probably pretty small dollar. I mean, in the grand scheme of things, when we say materiality, I think the baseline in most of your opinion units is $170,000. So we take so then for smaller transactions, like I said, we just take a random sample of 40 cash disbursements, because that would be in your essentially AP, and look at those. And so unless one, and you guys have thousands of transactions, so just being honest, it's more than likely that maybe we'll look at 1 or 2 of those.
Okay.
We also we're required to perform preliminary analytical, where we take essentially your trial balance from 20 compared to 19 and look for any large variances. If we see something that looks unusual, we'll perform procedures over that. And then we also perform final analytical, same thing on profit and loss accounts, looking for any unusual variances. And if there are unusual variances, huge swings, material swings, we'll perform additional procedures over that, look at details, talk to management, what caused it. So something like that, and I'm not trying to say it's not significant, but in the grand scheme of things, it's probably such a small account, so in the grand scheme of things, that we probably didn't look at individual transactions for those. If it was $1 million account, we definitely would look at details of that to make sure that we looked at transactions. So once again, when we give our opinion, we can say it's materially correct.
Sure, that makes sense. Thank you.
However, next year, once again, as part of our procedures, we're required to meet with at least 1 member of, the governing board. So if that's something that, anyone, Vice Mayor Baclan in this case, or anyone else would like us to look at that account or any other account, we're more than happy to do that as part of our audit procedures.
Any other questions?
Okay. So I'll jump to the letter to the governing board, which is the smaller of the two packets. And this is just required communication. Anytime we do an audit, we're required to present this to the governing board. Pretty similar stuff that we talked about in the financial statements. It says we did an audit, Providence Seward Medical Center. At the bottom of page 1, one thing that I didn't really touch on, mainly because it's small, but during the year, the city implemented GASB Statement 84, which took your previously presented teen council fiduciary fund in FY19. All years prior to that, there was a separate 3 pages for the teen council agency fund. Due to GASB 84, it no longer meets the requirements to be a fiduciary fund, and so now it's presented as a special revenue fund. So if you're looking at the financial statements, and I didn't even point it out because it's only $19,000, but there was essentially a restatement of beginning fund balance for $19,000 just because we took it out of a fiduciary fund and presented it as a governmental fund, and it will be presented like that moving forward. So I did want to point that out in case anyone noticed that, but once again, it's such a small change. Top of page 2, one thing I always like to talk about is management's estimates. As part of the audit, management's required to come up with certain estimates or estimates over certain areas of our audit. It's our job to look at the estimates to make sure that they're reasonable and consistent under the circumstances. So the biggest estimates related to your financial statements are management's estimate of the useful lives and depreciation methods of your capital assets, the city's proportionate share of the net pension and OPEB liability. And even though that isn't management's estimate, it still is an estimate, and we'd like to point that out. And then the allowance for doubtful accounts. In almost all of your enterprise funds that have accounts receivable, management comes up with an allowance based on historical trends and collection rates over the accounts receivable. So again, we look at those estimates that management puts forth and make sure that they're reasonable and found no problems with them. Top of page 3, so corrected and uncorrected misstatements. As I said earlier, anytime we propose anything more than what we consider a trivial misstatement, we're required to disclose it in financial statements. As I said, finding number 2, when there was a number or multitude of accounts or a number of accounts that needed to be adjustment. These are the 7 adjustments that we consider above trivial that we posted. And then in the middle of the page, those 3 adjustments are essentially misstatements that we identified, that they were immaterial to the financial statements as a whole and to the individual opinion units, that we did not propose adjustments to those. And that is kind of the main things from the letter to the governing board. Part of, I should note, part of the delay in the issuance of these financial statements is Providence received, so they received CARES money, but they also received provider relief funding. And until just about a month ago, the thought process was that those numbers needed to be presented as of 12/31. And the Federal Department of Health and Social Services was holding steady that they were going to provide some guidance on how to report those monies once it was, once they figured out how to report that money. The hospitals had to report the money, and whatever was reported to the feds then needed to go into the CFA. So just about a month ago, they decided that they were holding up a crazy amount of financial statements across the country, and they said nothing needs to be presented in the 12/21 or the 2020 financial statements. That information will be presented in fiscal year 21. So I've spoken with Jessera, somewhat made a plan for moving forward. I know that when we in your RFP, the goal was always to get these financial statements. I think your charter says 4 months after your year end. As we talked about last year, that might be a little bit of a stretch, but we've talked about a plan on getting this done quicker. The deadline for the annual financial report to be submitted for consideration to get your certificate of excellence is 6 months. So, and not to put words in your mouth, but that's, I think, our goal next year is try getting it submitted by June 30.
It's gonna be some give and take.
Sure. Yep. And once again, I work for you guys, auditing management, so we're all work together on getting it done in a timely manner.
Well, as you say, we just received these books. I'm sure as we dig through it, that was a great presentation. Thank you. If we have questions, I'm sure we can talk to our new finance director. Is there anything you want to say?
Actually, yes.
Okay, good. That'd be great.
Yeah. So, a couple of things that I did want to note, and I'm glad you just touched on that, is there is the code that states that we have 120 days after year end to complete the audit and another 30 days to complete the financials. So this was going to be a discussion that Brent and I were going to have in regards to finding number 2 was a lot. They were missing a finance director, they were short-staffed. So at year end, when you're trying to balance everything and get things to reconcile, you just really have to try to make sure that you have enough time. And so I think finding number 2, part of the reason that was a finding 2 years in a row is because they haven't had a finance director, but also the timing. So the auditors were here in the middle of March, which only gives the finance team 2.5 months to reconcile a whole year's worth of financial data. So this next year, I want to get back on target with code and give us a little bit more time, and then also give the auditors enough time to complete their audit and their review. So like I said, that's what I was saying when I said it's going to be a little bit of give and take there. So that'll be something I'll want to discuss with you all next year. I'm glad that he mentioned Providence as well. We have struggled with getting information from Providence. When I first started, I didn't realize how severe it was until I waited weeks upon weeks. So this isn't anything against Cole White, who is here in Seward. He's great to work with. But Providence here is small compared to big picture. Corporate is huge. And so what I found out in working with the hospital is trying to get any information, especially for capital assets, was very difficult because you work with Cole and he does what he can, but whenever it comes to something that is not in his basic general pool of information, he's got to go to corporate, and they end up contacting me with the person who's so far removed and so high up, he doesn't even know who to give me in contact with. So we were trying to get capital asset information. We finally got it at the very last minute, and again, it was information that we didn't have in the beginning with the contracted person that the city had hired to help finance with the capital assets. So there was a lot of little things that, going forward, that we have the information now, we're definitely going to clean up for next year. So there's going to be a lot more discussions that I'd like to have with you guys for year-end process and the audit as well.
That's great.
And we have cleaned up already. We've already fixed the capital asset finding. I know you guys can read in there my remarks that I did. We haven't had a chance, I should say, I haven't had a chance to bring it up to the department heads yet. I was in the hospital on Wednesday and we had a department head meeting, not COVID. It was kidney stones. So,
No, aren't we, isn't it sad that we're happy it's kidney stones?
Yeah. So we, at the requisition level, we have put a type in there for including it if it's a capital asset. And so it's just going to be training department heads to get them to be able to identify what a capital asset is, which is the city right now currently recognizes capital assets at $2,500 and 1 year useful life. Which is also another thing that, of course, talking to Jeanette and a few others, I'd like to also kind of maybe touch on what capital asset is for common practice, which is actually currently $5,000 is GAAP standards, and so I would actually kind of like to discuss that with you in a future meeting as well. That's what's typically recognized as a capital asset is 5,000. So just little things like that to kind of get us in line with GAAP standards. I'm sure at one point, $2,500 30 years ago was a lot of money, so we probably tracked it that way. But, you know, I want to get back to where we need to be, and I think the $5,000 mark is something that's more trackable, and I think the auditors would agree with that too. So those are just some of the general highlights from just being here for a month and a half. So the requisition will actually give us the opportunity to track assets any time in the year. We should be able to pull the capital assets at the requisition level and know where we are throughout the year. So we've already fixed that, so hopefully we can get the development.
That's great.
That's all I have.
We're very happy to have you on board, and it sounds like it's nice that you're made aware of things, because then it seems like you've already made some plans on how to address, so thank you very much.
Yes, the year-end process, I think utility billing, as you know, I always say, if you haven't worked in finance, and you haven't worked in a finance department that has utilities, I don't think there's really a clear understanding of the beast of the nature of utilities is a whole different ballgame when you're working in finance, and so there's definitely a lot of cleanup, and I am keeping on top of the forensic audit, the internal audit, so that way I can make the changes that I know need to be made. And I haven't gotten any pushback from the team. They're open to fixing things too. They want to make sure it's done right. So the year-end procedures is probably going to be the one that's the most interesting, because I haven't been here for year-end process yet. And like I was telling Brant and Jeanette and Steven, it's probably not going to be until 2023 when they present the audit for 22 before we really start to see some of those year-end changes being improved. Because we're already more than halfway into 2021, and some of the changes that need to take place probably aren't going to happen until after December 31st. So if you look at my remarks or my reply on some of the findings, you'll see some of the dates that I have for effective aren't until the year-end procedures happen for next year. So I was kind of trying to think forward thinking there. So you guys have questions for me or anything?
Just definitely remind us of all that next year too.
I have it all in notes.
Are there any questions for the finance director?
I don't have any questions, I just want to say that I feel confident that things are getting taken care of, and I'm happy to hear that, you know, everyone's on board with fixing all the utility billing and stuff, so. Really glad you're here.
Thank you. Thank you.
Go ahead.
The contractor that was not properly reporting the capital assets, is that the contractor that administration had hired?
It's the CPA hired to assist finance when they had lost the finance director. And I think it's directly attributed to not understanding city procedures and how we did the capital assets, and that's the risk that you run when you hire a temp or a contractor to fill a position. Sometimes you can get somebody in those positions and they just run with it, and sometimes if it's a private sector person that doesn't have a lot of government experience, that's kind of the issues and the risk that you run when hiring somebody that doesn't have a lot of government experience. So unfortunately, it was the other side, and they didn't really it was the additions, which is why we're adding the requisition level to track the capital assets. That'll fix that.
Go ahead.
This might be more of a question for you as the mayor, because I don't know how, or past council members, but how were those contractors hired? Were they, we go out to bid?
I think that was a direct hire from the former city manager. I don't think it went out to bid. I think it was someone from a previous audit firm also, which was why that person was chosen.
Correct. Now, I do know that it was the previous audit firm, an employee. I don't know if they were currently the employee at the time or if it was just a previous employee from the previous audit firm.
Yeah, a previous employee from the previous. So I think that they thought that they would be more familiar with our process and procedures.
Exactly.
That neither that city manager nor that contractor are with us at this time.
Yes.
Any other questions?
And I would just like to make a quick remark, sorry. And I should have brought it up. Part of the delay was dealing with Providence. And I slipped my mind. Dr., who's one of our our managers who wrote the financial statements. That's the service we provide as part of the audit procedures, is writing the financial statements. As I said, we take Providence's financial statements and roll them in. He identified a $1.7 million addition in April and sent that question to Providence, asking, hey, can you confirm what this is, because it needs to go into your capital asset records. We just got an answer probably 10 days ago. And Tucker knew what the answer was, but it, you know, we called. And listen, I'm not speaking ill of Cole. You know, in time when he says he runs it up the chain, it goes to Washington and it gets lost in the shuffle because when they get Seward, it's just a cog in the wheel. We called the main CFO of Providence a number of times. Like I said, it took him, you know, 3 months to give us an answer that we essentially already knew. We knew it was capital asset additions. They just didn't know what it was, and we finally got an answer, and it was, they truly given $2 million instead of the 1.7 they recorded, and that's actually one of the uncorrected misstatements in the letter to the governing board for $300,000, which was the difference, and you know, they didn't even know their financial statements were misstated until we pointed it out. You know, so that, you know, like I said, that was a huge delay in getting financial statements issued because we had just essentially a guess. We knew it was capital assets because we could see it, just the math work, but they couldn't give us an answer, so that's part of the delay. But I'm actually happy that Joshua, was here to see that, you know, so you can identify,
Yeah.
start looking at those things sooner rather than later and building, you know, really good rapport.
Yeah,
And I think
Robert and Cole are doing phenomenal things. You know, if we, you know, Providence works for us, and there is a Providence board, and there's a local, you know, there's a local advisory board for Providence. So, you know, if we need to use political pressure to get information out of them, I don't think that there's, I mean, there shouldn't be any lack of response from them. I know it's a large system, but they work for us at this point. So.
Sure. Well, and he's aware of it. He did say, hey, he knew it's been a problem every day that he's been there, but I think now it's a present problem, you know. And it's, once again, it's assets that they had purchased and transferred to the city. And once again, it's just something they do in their books, you know, and you wouldn't even know it by looking at their financial statements until you really dig into them. So, again, it's on his radar, you know, finance as well. So hopefully that's avoided, you know, moving forward. So.
So like page 119, I just noticed that seems like our number of streetlights have been the same since 2011, which I kind of doubt. And then like, you know, it'd be interesting with the new subdivision with the lane miles of street, you know, just nitpicky little things that I'm able to look at. You know, and it's, you know, it's good that our water service connections have gone up on page 118. You know, those are the indicators that we need to look at the economic health of the city also. You know, how much water we're treating, number of service connections for our electric department has gone down quite a bit. So it's just, you know, there's lots of things for us to look in here and dig into, so.
Sure.
Yeah.
And I would, not that it means much, we, in our opinion, we say we don't audit this information. You know, so I don't want to say take it with a grain of salt, and we can manage this the best they can of pulling this information together. This is always kind of the last thing that's pulled together, because one's going to need the financial data for about the first 10 tables in this, and then the rest is just essentially information gleaned from, you know, available records.
Mayor Carey,
Go ahead.
can I ask that? So he is correct, they do not audit the statistical piece of this. The statistical piece is actually derived from a lot of external, so a lot of state governments, and even some internal, so we have to reach out to departments to get numbers too. Going forward, if there's an issue with some of the numbers, I can definitely reach out. One of our finance members was the one that this was the first time she worked on this piece. So collectively, I was actually impressed with how quickly she was able to get the data in such a short period of time. But next year, I'll definitely work with her, making sure that the numbers are correct if they aren't correct right now.
Yeah, and I'm not saying they're not correct, I was just.
No, that was a great observation. That's why I thought, well, that is interesting. So.
Well, good, yeah, thanks. Any other questions? But again, if we have further questions after we digest, we might reach out to you. Go ahead.
I'd like to know, what the final bill was for the, for the accounting firm that we contracted with. Is there any way that we can get that?
I can get it to you at a later point, I don't have that information on me right now.
Thank you.
I can bring it to the council meeting after we leave here.
And I would like to say, just for all you council members, you know, essentially, even though we do your audit once a year, we work for you year-round.
Yeah.
So if you have questions, you know, I know that, you know, the invitation stands to the finance department, but as council members, as I said, we work for you. And if you have questions about any matter that might come up during the year, I'm available, and you know, the finance department, the clerk, we have our contact information, so.
Yeah, that's great, thank you.
And we'll reach out, let's get it started on the next audit as well.
Did you have anything to add?
The only thing is, thank you, because there are times it was very frustrating, I know, for you to get the information that was needed to complete the audit. And so thank you for bearing with us, and thank you, Jessra. I know that the processes and procedures have already been put in place, and so we will keep moving forward to clean things up, so thank you.
Well, we'll go ahead and adjourn the work session, and we'll see folks back here in half an hour. Thank you.